All right, let's dive into the story of Emcure Pharmaceuticals. We're going to unpack the company's massive 5-year transformation. We'll break down exactly how they pulled it off and what it all means for their future. So, this is our starting point. Emcure was a solid company, no doubt, but not quite in the big leagues, ranked 13th in the Indian pharmaceutical market. But the most important thing on this slide isn't the rank itself, it's the goal to break into the top 10. That single target right there is the key that unlocks every strategic move we're about to look at. So, how does a company actually make that kind of leap? Well, for Emcure, the answer was a complete strategic overhaul. They decided to fundamentally change who they were, from a pretty standard domestic drug maker into a highly specialized global player. And that whole transformation really started with building a durable competitive advantage, what investors love to call a moat. For Emcure, that moat was their powerful new mRNA technology platform. This slide, right here, this is the origin story of that moat. It all started with the Gemcovac 19 vaccine. That was the proof of concept. It showed the world their mRNA platform was legit. But here's the thing. It was never about just one vaccine. It created what you could call a biotech as a platform model. Suddenly, they had a proven, repeatable system to develop other vaccines, opening the floodgates for huge global licensing deals. And this table just lays it out perfectly, the old way versus the new Emcure model. On the left, you've got your traditional pharma playbook, low-margin generics, cutthroat competition. But on the right, you see Emcure's big shift. By leveraging their tech, they could create high-value specialty products. This insulated their profits and let them target lucrative markets in places like Europe and Canada, instead of just fighting a race to the bottom on price in the US. But, a strategic pivot this massive doesn't just happen in a vacuum. It was only possible because of a crucial financial and corporate overhaul, which we're going to look at right now. The company basically did a full spring cleaning. Before 2023, you had a classic family-led structure and, more importantly, a major legal battle over their core mRNA tech. Fast forward to post-2023, they brought in independent directors for better governance, which means more transparency for investors, and crucially, they settled that trade secret dispute. You can't overstate how huge that was. It cleared the runway for their IPO. And that IPO, that was the real catalyst. Emcure took that money and used it to wipe out its expensive debt. Just look at the impact on the numbers. The debt-to-EBITDA ratio, which is basically a measure of how easily a company can pay its bills, plummeted to a very, very healthy 0.70x. At the same time, their profitability, measured by return on capital employed, shot past 21%. This is what financial discipline looks like in black and white. So, with a rock-solid balance sheet and a crystal-clear strategy, Emcure was ready to hit the accelerator. This next phase was all about a two-pronged attack, dominating their home market and building some powerful international alliances. First things first, they shored up their domestic base. By buying up the rest of Zuventus Healthcare, they played both offense and defense, protecting their market share in core areas like gynecology and cardiology, while at the same time pushing into new ones. This move pretty much secured their path towards that top 10 goal. And that strength at home, combined with a spotless record with the US FDA, turned Emcure into a magnet for the global pharma giants. You see, companies like Novo Nordisk and Roche, they wanted a piece of India's booming market, and Emcure became their partner of choice, the central hub for distribution and market access. And this slide right here, this is the payoff. The results are just striking. Profit after tax rocketed up by 48%. International sales now make up more than half of their total revenue. And they managed to do all of this while getting to a point where they were almost debt-free. This is the beautiful culmination of that entire strategic transformation we've been walking through. So after this whole journey, where does that leave us? Well, this entire turnaround story boils down to a clear, balanced investment thesis. Let's synthesize the bull versus the bear case. Okay, the bull case, the reason to be optimistic, is really built on these 3 layers you see here. The foundation is that super strong, deleveraged balance sheet, which gives them the firepower to expand. The next level is their smart focus on specialty products, which insulates them from nasty price wars. And right at the top, you've got the hidden gem, the untapped potential of their mRNA platform. But of course, there's always a flip side. The bear case points to 3 main risks. First up, valuation. With a PE ratio hovering near 30, the stock isn't cheap. It's what we'd call priced for perfection, meaning any little misstep could lead to a big drop. Second, domestic competition is really heating up. And third, Those high R&D and royalty costs could start to squeeze their profit margins down the line. And that all leads us to this fascinating chart. While the broader market, the Sensex, was selling off, Emcure's stock did the complete opposite. It decoupled. It went on its own path, surging to an all-time high of over 1,670 rupees. This is the market giving its stamp of approval. It's a signal that investors are now seeing Emcure not as just another generic drug maker, but as a premium specialty pharma company. So, we're left with the final critical question. The market has absolutely rewarded Emcure for its incredible transformation. But is this new, higher valuation sustainable for the long run? Or has all the good news and maybe even all the future growth already been priced into the stock today?